Before you ever place a trade, before you read the charts, and before you watch the news, there's one thing every successful trader understands first. It's the market itself. Welcome to BEM Academy. I'm Ege and I will be your host. In the next few minutes, we are going to make sure you understand what a financial market really is, how prices move, and why it matters for the money you're about to risk. Let's begin. Here's what we'll cover in the next couple minutes. First, what a financial market really is. Then, the four major asset classes you can trade. And after that, how prices actually move. And finally, the real risks every trader must respect. It's the foundation everything else in this academy is built on. So, let's start with the obvious question. What is a financial market really? Forget the suits, the screens, the noise. A financial market is just a place where buyers and sellers exchange something. Currencies, stocks, gold, oil, contracts, at a price they both agree on in real time. Think of it as the world's biggest open bazaar. But instead of trading fruit and spices, people trade ownerships, currencies, and contracts. And instead of being in one city, it runs across the entire planet, 24 hours a day, somewhere. Trillions of dollars change hands every single day. Inside that giant market, you'll keep meeting four worlds. First, forex, the biggest of them all. Over $7 trillion moves through it every single day. You're trading one currency against another. Euro/USD, GBP/JYP, or gold against the dollar. Second, stocks and indices. Stocks let you own a piece of a company, Apple or Tesla. Indices bundle hundreds of them together, the S&P 500, the Nasdaq 100. When you trade these, you're trading entire economies. Third, commodities, real-world goods. Gold, oil, silver, wheat. Their prices are driven by supply, demand, weather, or geopolitics. Welcome to the messy, fascinating real world. And finally, crypto. Open 24/7, faster moves, more volatility. Bitcoin, Ethereum, Solana. At BEM Funding, we focus on every market. Here's something most beginners never think about. Who exactly are you trading against? First, banks and big dealers. They literally set the prices you see on your screen. They move billions every minute. Together, they account for nearly half of all daily activity. Second, hedge funds and asset managers. Big, smart capital chasing what we call alpha, meaning anything that beats the market. Third, corporations. They're not here to gamble. An airline hedges fuel prices. An exporter hedges currency. They're using markets to manage real-world risks. And finally, you, me, us, retail traders. We are small per person, but huge in numbers and growing fast. We have never had better tools than we do today. When you trade, you're sitting at the same table as all four. Now the big one. How do prices actually move? Forget complicated theories. Every single move on every single chart comes down to one thing: supply and demand. Rule 1. When more people want to buy than sell, prices move up. Rule 2. When more people want to sell than buy, prices move down. And rule 3. When buyers and sellers are balanced, prices stay flat. Until news, data, or sentiment breaks the balance. That's it. Every candle on every chart is just this fight playing out, second by second. Open any trading platform and you'll see the two prices, not one: the bid and the ask. The bid is the price the market is willing to buy from you. The ask is the price the market will sell to you. The gap between them is called the spread. Here's a simple example. Euro/USD might be quoted as 1.0502 on the bid and 1.08506 on the ask. The difference, 0.4 pips, that's the spread. Why does this matter? because the second you open a trade, you start in a small loss equal to the spread. The tighter the spread, the cheaper it is for you to trade. Major pairs like Euro/USD have very tight spreads. Exotic pairs and crypto much wider. Always check your spread before you click. Quick but important distinction. Trading is not the same as investing. An investor buys an asset and holds it for months, years, sometimes decades. The goal is to grow wealth slowly. They look at fundamentals, earnings, balance sheets, valuations. A trader plays a different game. The horizon is shorter, seconds, hours, days, sometimes a few weeks. The goal is to profit from price movement. The tools are charts, indicators, news, sentiment. Same market, very different mindset. In this academy, we are focused on trading, but the same first principles you're learning today apply to both. So why do people actually trade? There are three reasons that keep this entire system alive. 1. Speculation. Profiting from price moves. This is what most retail traders do, including probably you. 2. Hedging. Protecting another position or a business. An airline hedges fuel. An exporter hedges currency. Hedging is insurance. 3. Finally, providing liquidity and generating income. Market makers and big funds do this. They quote prices, capture the spread, and run systematic strategies day in and day out. Knowing which category you're in keeps you honest with yourself. Now, the part nobody likes to hear, but absolutely cannot be skipped. Volatility. Prices can jump fast in both directions. There is no such thing as a safe market. 2. Leverage. Most prop firms and brokers offer leverage. It multiplies your wins, but it multiplies your losses in the exact same way. Most blown accounts die here. 3. Liquidity. Not every market lets you exit cleanly. Slippage, getting filled at a worse price than expected is real, especially around news. And finally, yourself. Emotions, FOMO, revenge trading after a loss. The hardest market you'll ever trade isn't the chart, it's the one inside your own head. The market doesn't care how confident you feel. Respect these four and you'll already be ahead of most beginners. Let's recap. 5 things to take with you. 1. A financial market is just buyers and sellers meeting at a price. 2. Forex, indices, commodities, and crypto are the four worlds you can trade. 3. Prices move when demand and supply break their balance. 4. Every quote has 2 prices, the bid, the ask, and the spread in between. And finally, the biggest risk you'll ever trade against is the one in your own head. In the next episode, we zoom in on the 3 markets you'll actually trade at BEM Funding. Forex, the world's biggest, deepest, and fastest market. Indices, where you trade entire economies. And finally, commodities, gold, oil, silver, driven by the real world. We'll break down exactly how each one moves, when it moves, and how to think about it. Look, you now speak the language of the market, and that's not nothing. Many people who trade actually doesn't even bother to learn about this stuff. If you're ready to put it into practice, BEM Funding helps you do that. You take the trade, we take the risks. Link is below. I'll see you in episode 2. Take care.